Andrew, and as I'm watching what's happening in the markets today, obviously the NASDAQ and also with the bonds, just had a thought that popped in my mind, and I thought I'd make a little video just to share my thoughts. It's rather ironic. I mean, what I'm thinking is that bond, Freudian slip, bond investors have not been involved in a bear market for the last 40 years, since the 1980s. It's like a whole new generation of investors that have never seen a shift in bonds. I mean, it's almost like you've been lulled into complacency. And really what I think is, what might happen? I remember in 1994, interest rates spiked, housing market took a dip, strong dip, a big, I guess it was like a little minor recession, but stock market took a hit, and that was a spike. But I'm saying a bear market in bonds. It's just mind-boggling thought. I mean, we get so used to, since 2008, these ridiculously low yields. I mean, now everyone talks about the everything bubble, from if it's commodities to stocks to property to real estate, you name it. I mean, what happens? Interest rates go up. I mean, it's obvious. Property's going to get whacked, inflation. But you kind of take it day by day because you know what? You might even have deflation. Who the heck knows? But, I mean, this is the whole idea of being what I call myself a trend follower. I don't make predictions. I just try to see what's happening, and what I see happening isn't really the most favorable for people that hold bonds. I mean, basically, your yields get wiped out. And the other interesting thing is David Tepper from Appaloosa, who is this great hedge fund manager, he came out with a very broad statement, and makes one wonder, does he really want to unload his stocks, or is he just really, this is what he really does believe, that bonds have stabilized? Well, if I look at the chart, which I just glanced at, haven't stabilized. They're changing. They're not doing the greatest, and also the NASDAQ's not doing the greatest. So really, what I want to say is, you kind of take it day by day. Don't listen to any guru. There are no gurus, because some of these gurus, they blow up from long-term capital, where these guys all had PhDs and they lost all kinds of money. I mean, look at simple ideas of trend following. Follow the trend. Realize that a lot of trades aren't going to work. Realize that you're going to have, if you follow a plan, small losses. You're going to have small profits, some rare big profits, rare. But you avoid the big losses. And that's really what trend following is all about. And it's being aware. And my awareness with the bonds is anything can happen, and just be prepared. Anything can also be happening in the stock market. I mean, we're below the 50-period exponential moving average. It's not good, not overly favorable. I don't have any stocks on my watch list that I want to buy. I'm just kind of chillaxing and looking at my past trades, seeing what I did right, what I did wrong, what I could have done better. And this is what a period of reflection is. And that's also what I definitely suggest, and what I've learned over the years, is go back on your past trades and learn from them. But don't be complacent. That's the idea that just popped in my mind, and I just thought I'd make this quick little video. And my whole idea is to try to help you become better long-term investors. Thank you.